Hello traders and welcome to the Trading Fanatic channel. It's Ilya here, and as always I'm super glad to have you, and here we are with another educational video where we're gonna dive really deep into market structure and especially how to determine and identify major and minor structure, right? So I've been speaking about this a lot, and here I am with a really detailed breakdown that I really think and believe will help you towards your understanding of market structure, because I think this is really the fundamental part. It's the breeding pattern of the market. So if you don't understand where you are, what is the positioning of price, what is the hard time frame doing, and then capitalize on the lower time frames as well, but you have to always be in the zone. You have to flow with the market, and you have to know where you are currently. So for example, where is price right now? Right? You see on the hourly, it's a lower low, but maybe on the 4 hourly, it's creating a higher low so that you can go long. All right. And in this video, if you have actually those questions, if you're constantly wondering, oh man, which time frame do I look at? From which time frame do I execute? What is minor? What is major structure? If you have those questions, make sure to stay till the end, because I'm gonna try to provide you with as much value, examples, and actually like textbook examples, and then we're gonna jump into some live charts as well. All right. So if you are excited about it, and if you potentially like and find something valuable from the video, make sure to subscribe and hit the notification bell in order not to miss the upcoming educational videos. And if you already did, let's see what do we have for today. Alright, let's first lay out the concepts, and then we are gonna jump to the live charts to actually practice. So first of all, as always, we have to start from the foundation. We have to really build up that knowledge in order to really dig deeper into the market later. So first of all, I really want to make sure that you are aware of the breeding pattern of the market. So the market moves always in high highs and high lows, and it creates impulses and then creates a correction. Why do the correction occur? Because when the market gets a little bit too high, liquidity is running out, and people are already thinking that the price is too high, so they start selling, taking profits, which actually turns into a correction, so that if the market is in an uptrend, then more people are actually buying lower, right? Because the concept of trading is actually pretty simple. You only have to buy low and then sell it high, or first sell it high and then buy it back low. That's it. But yet again, trading is one of the hardest things that you can possibly embark on, right? So first of all, you have to know that the market will always be moving like this, with an impulse, correction followed by an impulse, correction, impulse, and another correction. I have a video on this one actually explaining in details how you should identify this one and how to classify when a higher high is created. But very simply to recap, a higher high is confirmed once you have a break of the previous higher high. All right. So what happens if the market does this? All right. Is this a higher high? No, it's not. And this is actually the first signs of the market failing to break above and potentially a reversal formation, which we're going to have a look a little bit later. But so far we have an uptrend. All right. So make sure that you know the breeding pattern of the market. Then we need a little bit more details. When the market is creating an uptrend, it creates higher highs and higher lows. So if you are still struggling to identify higher lows and higher highs, and lower lows and lower lows and lower highs respectively, you definitely have to look into this. And a very good exercise will be just go to the market like this and just start reading price. Okay, so this is a lower high. The market broke structure to the downside. So this right here is my lower high. Then the market pulls back, and after the creation of a lower low, then you mark, all right, so this right here is my lower high. Then the market pulls back again, and after you see a new creation of a lower low, then you say, okay, so this actually, it's a whole zone. This is my lower high. All right. So definitely practice this one. I have videos on it, and I'm mentioning this on every weekly outlook and setups as well. So make sure that you are aware of how the market moves in terms of market structure, which is simple: higher highs, higher lows. The higher low is always followed by a higher high. If we're in an uptrend, then we have to always wait for the pullback, because again, we want to buy low, and then the market will continue moving in an uptrend until it finds some sort of resistance, or the market gets a little bit too high, when we are actually gonna change the trend. And I'm gonna show you how to identify this one as well. Then what we're gonna do is we're gonna jump on the hourly time frame. So what is happening right here? Imagine this impulse, the last impulse. This is the higher low, and this is the higher high, and this is your impulsive wave, right? How does this look like on the 1 hourly time frame? Remember, those two examples were on the 4 hourly time frame. All right. So once the market creates a higher low and then it creates a higher high, it could be, let's say it's 4 candles, or let's say 5 candles. But those candles will create structure on the hourly time frame. Can you recognize this? This is the same. This is impulse, correction, and creation of higher highs and higher lows. And just this one line right there, this one push, it's creating this structure on the hourly time frame. An uptrend, right? Can you trade it? Absolutely yes. This is how you actually day trade, right? Because if you don't get in right here at the 4-hourly low, higher low, you will get a lot of opportunities on the hourly to catch higher lows. Because the market is fractal, everything repeats on every time frame. You're gonna have this structure on the 4-hourly and you're gonna have the same structure on the 1 minute. It's all about knowing where the market is on the higher time frame, right? Then imagine this correction right here. How does that look on the hourly time frame? Here you go. It's a downtrend, right? So can you take shorts? Absolutely yes. Because once the market creates a higher high, you expect a higher low. So what you can do is you can actually capitalize on the move down. So I always suggest that you are careful with this one because you never know. As you can see, this is a potential higher low. You never know when the higher low is actually going to get formed. Well, in fact, you know if you have the strategy in order to tell you when the market is forming a higher low. But in fact, you can never actually drop a fib, let's say, and say, okay, at the 50% right there, the market is going to form a higher low. It's not going to work like this, right? Because it can actually make a double bottom, which is going to be a higher low as well, right? So within those 4-hourly pushes and corrections, we're having 1-hourly pushes and corrections, right? So right now, can you guess this price action on the hourly time frame, how it's going to look like on the 15 minutes? Each of those pushes and corrections on the hourly will have pushes and pullbacks on the 15 minute. And it's like inception, guys, like priceception, right? So if I just jump right here on the right a little bit, oh man, I'm running out of space. So what you can see, okay, really running out of space. Let's break this price action down. So imagine this right here is your 15-minute price action, and we're looking at this hourly price action right there. On this push to the downside, we're having a push, pullback, push on the 15-minute. So the same formation repeats to the 15-minute. Then on the way up, we're having a little bit of an uptrend, right? So can you take, and this is where you actually look for shorts, because if you want to sell from the lower high, you want to wait for this to happen on the 15-minute, and then all you need to do is wait for a break and retest, right? So you need for the creation of a lower low, pullback, lower high, and then the market creates another impulse to the downside, which is illustrated as push, pullback, push, pullback, push, pullback, push on the 15-minute. So it creates a downtrend, right? When actually the market initiates another correction, what do we have? We have the market failing to break potentially a structure below. We have a break of the most previous lower high. We have a retest, and we start initiating this pullback with the creation of a little uptrend. But this uptrend will always be lower than the previous uptrend, right? Because this is your lower high. This is where we sold. And now we expect a lower high. And if it's a lower high, then it means that it's going to be lower than the previous one, right? And as you can see, the market comes in right here, break structure, retest, you take your short again, and then you have the next impulse to the downside, which creates push, pullback, and push. All right. So this is actually how the market is breeding across all time frames, right? So it's really important. As you can see, we started from the 4-hourly time frame with just a simple impulse and correction. Then we translated each impulse to the hourly and each correction to the hourly. And then all those things on the hourly, we translated them on the 15-minute. So again, it's super important that you know where you are in terms of the higher time frame. And I always suggest that you start from the 4-hourly because this will give you the highest probability chance of seeing the structure as it is, right? And then can you imagine how the 4-hourly structure, how this structure right there, this one, is gonna look on the hourly time frame? Exactly. It's gonna be a series of this, a series of impulses and an uptrend on the hourly, and the correction is gonna be a downtrend, right? So let's break this price action down just very quickly. Grab this one. We have that push on the 4-hourly. This is the creation of a higher high on the 4-hourly, remember. Then the hourly shows a failure to make a new higher high. This means that we're having first signs of the market initiating the pullback on the 4-hourly. And then you have an uptrend on the hourly. And then where all the confusion, guys, comes is, okay, I'm having a downtrend on the hourly, so I am short bias. Well, you're short bias if you only look entirely from the hourly, but if you look on the 4-hourly time frame, you expect that around these areas right here, which could be a Fibonacci level, it could be a structure, it could be a trend line, whatever, you expect for a higher low to be formed. And then you start getting cautious. Okay, we have a double bottom on the hourly. Oh, we have a break of structure. All right, Right now, I'm gonna start looking for longs. And this is your move, this is your impulse on the 4 hourly time frame. And then again, you have a push pullback. Can you take a long from here? Absolutely. Why? Because you expect a higher high on the 4 hourly time frame. The market impulses, pulls back. Can you take a long from here? Absolutely, because you still expect the market to move up, right? And once you see the first failure again for the market to break structure above, you're like, okay, this is my 4 hourly higher high. So I am expecting the market to start pulling back, and then you're going to see the same pullback to the downside, which will always be higher than the lowest point of the previous pullback, right? So I really hope this makes sense so far. And I'm actually going to go right now to the live charts and try to give you as many examples as possible and to really instill that higher time frame bias in yourself, because there are many people that are just trading the 15-minute, the 5-minute, even the 1-minute, and just staying on those time frames can be super confusing. So I always say base your trade on the 4-hourly time frame, take those corrections, so take those downtrends based on the hourly, but then always wait for your 4-hourly higher low to form for the hourly time frame to shift, and then you have your actually the highest probability trade, and then you can actually expect a big take profit, which we measure with the Fibonacci. I have a video on this one as well. All right. So I really hope those concepts are clear. Make sure to watch it again if you don't understand. But right now we're actually going to jump into the charts and have a look at some examples. All right, here we have EURUSD daily time frame, fresh chart, and you can see the daily. I said the 4-hourly, but for this purpose, I just want to prove to you that this concept works on every time frame, and this is how the market moves. So we're going to actually use the daily time frame as our hard time frame. All right, so let's just break down this market. We have this beautiful uptrend to the upside, and again, have a look. We have a push pullback, push pullback, push pullback, push pullback. You can take longs at all of those places, but what this is, this uptrend is a weekly push. Yeah, have a look. So on the weekly, we just have, let's say, 5 candles of push up, right? This creation of a higher high, but on the daily, you have a beautiful uptrend. And each of those little pullbacks right there will be 4 hourly downtrends, right? But then again, the concept comes in. The market creates a weekly higher high. When do we know that the higher high is ending? When the market breaks the most recent structure, which was exactly right here. A little tip, if you struggle to identify structure, go to the line chart. When you see a strong arrow shape like this, a strong peak like this, then this is a potential higher low, right? And as you can see, the last one was actually broken and retested. Back to the candles, we have this push, pullback, and then a confirmed lower low. And then what do we wait for? Is for a pullback, lower high in order to sell the market, which the sale was really beautiful. So right now, what I want to do is I want to dive even deeper. So I'm going to examine this push like this, and then I'm going to examine this 4 hourly, this daily pullback, right? So dropping to the 4 hourly time frame right now. Let's have a look. So this is your daily push. After creating the push right there, again, you can see even from the 4 hourly time frame, the 4 hourly time frame showed the change first because it failed to make a higher high. Here's your shift. It broke to the downside, lower high, big lower low, right? So this is your pullback. This is your first short opportunity, which is in confluence with the daily broken structure, right? And if I break down to the hourly time frame, this push will be a nice uptrend on the 15-minute, and then you're gonna see the market starts changing. Then we have this big lower low right there on the 4 hourly time frame. And again, you can see we have a push, pullback, and a push. What the market does later, when it's about to make the daily pullback, it creates an uptrend on the 4 hourly time frame. Can you trade this uptrend? Absolutely yes. So to be actually precise, we had this lower high. The market pushes down and then we pull back right there. So right here, we can actually look for sells, right? So we had the sell, but then the market failed to make a lower low. And this immediately tells us, all right, we are about to enter a complex correction. And this is where it gets tricky. Why? Because this right now, basing this on the daily, this is your minor structure, right? So this higher low and this higher high, this is minor structure, which is just in between. And then the market actually gets into the daily zone where it's supposed to create a lower high on the daily. And then what you see the market change again. Where is your most recent higher low? It's exactly right here. How do we find it? We go to the line chart. Yeah, this one is not very clear. Why? Because you have a lot of wicks, a lot of consolidation, but then we break below, we come back for a retest, and we confirm a new lower high, just right there. This is your first short opportunity. What happens later is we have a beautiful downtrend to the downside, right? And this downtrend is just gonna be a push to the downside on the daily, right? Then if you want to take this a level further, let me delete all of that. Let's say right now that we are looking at this push right there, and we want to examine this on the hourly time frame. Can we take longs right there? Absolutely yes. Drop into the hourly time frame. What do we have? We have a push. We have a pullback right there. Higher low. Push, pullback, higher low. Push, pullback, higher low. Then we break above, last higher low, and then we start consolidating. And again, a little tip from me. This is, I'm not sure if it's based on Elliott theory or something like this. Once we have 1, 2, 3, 4, 5 pushes, the market will start consolidating and then reversing down. So that's a little tip from me. How you can trade this one, again, keeping in mind that this is your minor structure right now. The major is right there. This is your major. This is your 4 hourly lower high, remember? And right now we're looking for a lower high, another lower high. This is actually a daily. This is your 4 hourly right there. And right now we start to pump to the downside. And then you might get a little bit confused because again, you have some changes of structure. Let's say you have a lower low, but then the market strongly breaks above and you have this break and retest. And you're like, okay, should I go long? Look at that break and retest. Well, no. Why? Because this is your major lower high. You wait for this market to push and pull back to create another lower high. And this is the area that you're only gonna be looking for sells. All right. And how do you look for those sells? Well, there are all the strategies that we can use. You can drop to the 15 minutes to wait for the market to change structure. You can go to the lower time frames as well. And yeah, this is actually it. So if I actually want to give you something actionable to carry on from this video, I want to give you a little strategy, right? So let's say that your main time frame is going to be the 4 hourly time frame. All right. So first of all, you determine your major structure on the 4 hourly. So let's break this down in order to avoid the confusion. All right. So let's say that this was our major lower high on the 4 hourly time frame. So we're not going to have a look on the daily. Again, this is your 4 hourly. We have this push. All right. So this is your major 4 hourly. Let's drop it like this. In between this area, between this level and this level, we are going to be waiting for the pullback. And as long as the market stays below that level, we are going to be looking for shorts. All right. But then what you have in between is the market pulling back, pushing to the downside, pulling back, and then we have a failure to break below. So what does that mean is that we have a little change of structure. Okay, so potentially if you start seeing this and then the market starting to impulse to the upside and even break structure, let's say it broke structure exactly right there, you can take really shorter term longs, but really short term and maybe only on the hourly and on the 15 minute. But once the market gets into an area like this, which is close to the most recent lower high, you start looking for sells. And what you're going to be looking for is for the creation of the lower high again. How do you confirm a new lower high? When a higher low was broken. Where is your higher low again? Right here. Did it break? Yes. Break to the downside. Then, after you have your new major lower high, all you need to do is wait for a pullback. All right? Push. Here's your pullback. You have your rejections. Then what you do, you drop to the hourly time frame. Right? What does the hourly time frame do though? It impulses to the downside and then it creates an uptrend. Do you care? No. Because this again, this is minor structure. You don't care about this. All you're focused on right now is sells. And then what you start seeing is the market failing to break above. So keep again this in mind, this formation, the market creating an uptrend, then failing to break above, maybe pulling back again, then failing to break above, and maybe even creating a lower high, like this, and then to potentially push down. Have a look at this formation right here. We had a higher high. Nice. We have a higher low. Cool. We have a push. It fails to make a new higher high. It fails to go higher. Then we have a little bit of a pullback, right? And then we still fail again, and then we drop to the downside. And at this period right here, once you have this bearish engulfing candle potentially, you can drop to the 15 minute or you can drop to the 5 minute. What does the 15 minute do? Again, focus. We have a push, we have a pullback. Actually right here, we broke the most recent structure, but this is a little detail again. This is how you zoom in, because if you drop to the line chart, you're going to see that right here, this was your last higher low, right? So we break below this one. This is your first indication that we're about to reverse. Then the market pushes up, creates some sort of structure, pulls back, double top, breaks that structure. So it broke even this one right there. Because if you drop to the line chart, again, we have new structure created right there. So this could have been a higher low for the market to push up, but it didn't push up and it creates this double top right there. We break the structure and then we come again for a lower high and then we start to sell off, right? So your opportunity is basically right there, exactly right here on the retest. If I go to the 5 minutes, have a look, same thing on the 5 minute. We have a push, we have a pullback. We have a push, pullback with this one candle. higher high, higher low, and then the market starts to fail to break above, right? And then we have a break of structure, retest, break of structure, retest. So you can enter right there. Because why? This is a structural level again. Have a look, EMA tap as well. Or you can even enter right there on that break. Multiple opportunities. What if we go to the 3 minutes? Again, have a look. The market fails to make a higher high, lower low, lower high, big lower low, and then it just starts repeating that formation and strongly to push to the downside. So this is something that I wanted to share with you guys. Major, minor structure, it all depends on which is your main time frame. If we do it with the hourly time frame, it's gonna work the same as well, right? You're just gonna change your bias very often. So let's say we have this big downtrend and this is your lower high right there. Let me mark it. This is your lower high. What does the market do later? It breaks above this lower high, right? So we basically have a new higher high. We came for a quick retest, right? So then you have to find where is your higher low. And if I drop to the line chart, well, yeah, the last little spike is exactly right there. So if I drop to the candle, you see that we have a little push, little pullbacks right there, and then the market strongly impulse to the upside. All right. So we might mark this as our major. Then we have something in between right there, but then the market retests that area. This is pure manipulation to the downside, and we continue trending to the upside. All right. We have a break of this structure right there. We come back for a retest. We have a continuation to the upside, push pullback until we start seeing the failure. Right? Then where is your most recent higher low? Right there. We broke it. So from here, this turns as our major structure, and we're going to be looking for sales until this one is broken up. And again, we refer again to the same analysis, which was based on the 4-hourly. Therefore, I always advise you guys and my students as well to always use the 4-hourly as a starter, and then to potentially start dropping down. Right now, a very nice short from very recently. What do we have? The market breaking down, pulling back. This is your most recent and major lower high. The market pushes down, pulls back. All right, this is a potential lower high. We failed to break, and right now we're breaking, confirming that this one is a lower high as well. If we jump to the hourly time frame to examine this price action, you're gonna see little uptrend on the hourly, little uptrend on the hourly, and when it's creating that 4-hourly lower high. If we drop to the 15-minute time frame, you're gonna see a big uptrend on the 15-minute, right? But when does that end? Is when you actually have a break of the most recent high low, which in this occasion was right there, right? It broke, but we didn't have a retest, so possibly you can even use the 5-minute. Make sure to use whatever is comfortable for you, because right here we're gonna have this, the market broke, it retested, and this is when the trend was actually created. All right. So I really hope this video is going to provide you with something valuable. I really feel that I have to do more examples. Please let me know if you need more examples of this. I'm going to make sure to do so, and make sure to pay attention to the weekly outlook, because I'm breaking this down every single week. All right. So if you found something valuable, make sure to hit the like button and subscribe as well. Make sure to leave me a little comment down below. I really hope you're not confused, because this is a lot to take in. Rewatch it a little bit and just go to your charts and practice. If you ever have any questions, my Telegram, Instagram, email is always open, so make sure to reach me out. All right. I wish you an amazing week, a successful day, and talk to you on Saturday when I'm going to release the new weekly outlook and setups.